What's up YouTube, it's Louis here, I hope you're all well. Today we'll be looking at Quant, first of all on the weekly time frame, but let's dive into my Twitter, Louis_crypto. Make sure you're following and do turn on the notification bell on. I've been making so many posts over these last few days. Thank you guys for the continued support over here and over there, but I have been making more posts over there, so you're all just aware. Over 50% of you are not subscribed, so I would ask if you could do so. Again, make sure to like this video. Let's smash 200 likes and push for 5k subscribers as quick as we can. Thank you guys. So over on Louis_crypto, I was essentially saying, I don't even remember when it was, yesterday, that we just formed a bearish cross. I told you ever since we had this wick, this first initial wick, that it would be filled in. The direct next day we filled it in, and I said if we close below the 200 EMA as well as this purple line, which is the inverse head and shoulders neckline, I said that if we close below this with the daily time frame, that this invalidates any bullish scenario to $400. The next day we just pumped into this old support. As we see here, we're pumping from it now as resistance with the wicks going up. So that's just further confirmation that we're going to head lower into the green support zone. I was warning you guys of this, but unfortunately, I'm always going to get these people now that we're growing more. But someone said, Louis, you're panicking. I don't know how I'm panicking because the next scenario it happened. So I just said someone earlier in the week saying I was panicking, and yeah. You don't want to delude yourself in this market, guys. The reason why I knew that Quant was going out was because Bitcoin lost 18.6k. That was the higher low, which it should have never formed that higher low. Because it did, it was bullish. As long as you were holding it, everything's bullish. And that was formed on the 30th of June, that higher low. And for Quant, look where the 30th of June it was. That was the higher low, $50. So essentially, if Bitcoin's above 18.6k, which was the 30th of June, which is essentially where this is right now, then Quant should be able to go up, because if Bitcoin has got a higher low, which means it's technically bullish, then the rest should follow. And that's why Quant went on it to do its own thing. We'll go back to the weekly time frame now, and we can see that unfortunately with the weekly candle close, we did close below $122, I believe it was last week. It's moved down $1 now. However, even before we got this weekly close, I told you with that daily close below the 200 EMA, as well as the inverse head and shoulders neckline here, that was enough already for me. As I said, any pump is just fake. We pumped up, it was fake. Even though we closed above the 200 EMA, I said this is not good enough, guys, because the level you now need to technically reclaim is not even this bear market box. There's going to be people arguing that really you need to break above 232 to flip this bullish. Now we've made this lower low, you're only flipping this bullish with a higher high. A higher high would be above $230. So technically, as long as you're below $230, we could go to $229. You're still bearish. So that's what I mean by any pump up is just going to result in a failure. So even if we do head up back up to 150, 168, for me personally, I'm more focused on 168. If you reclaim 168, we're going to see this impulse and try and take out the high. Until then, any pump is fake. Even if we pump to $168, I won't believe it until you're above it, okay? That's just how it is. Why? Because we invalidated the bullish scenario. We invalidated it. We validated it by confirming its support here and heading towards the target, 440. But we always knew that this old head and shoulders neckline was going to play out in the future. We were always saying from December last year, from January earlier in this year, we were saying this line will be used in the future. I think because we had something similar on Bitcoin. If I go to Bitcoin really quickly, I think we had a trend line over here which was retested eventually. So, and you can see there was a shoulder, head. Well, the true necklines there, but you get what I mean. We eventually came back up into that neckline. That trend line that we once had. So the same thing happened with Quant. Well, I can't type it. Sorry, I have to go over here. I do have a link to this chart. It's not a link, you just need to copy and paste it. It's under the video. You just need to start typing on the chart. When you start typing, you undo this and you press you press paste, and then you hit enter. You don't click any of the options, you just hit enter. It will open this quant chart. This quant chart goes back to 2018. This will give you the most data. And when I've already explained in the past, We had our wave 1, wave 2, wave 3, wave 4. We're missing that final wave 5. However, in this wave 4, it potentially might not be done. We just can't take out this old wave 1 high, essentially. That's where you can't go below $16. We spoke about that way back back here when we were coming down, but we reclaimed that higher low. As soon as Bitcoin put in that higher low, I was telling you everything's going to go up in the short term. We ran into this old head and shoulders resistance, which is where we need to look at again. And basically, if we zoom out and go on the weekly time frame, we can only see 2 patterns on this chart: the head and shoulders, as well as the inverse of that, the inverse head and shoulders. So there's technically only 2 necklines that really matter, the 2 purple lines. So when we validated the inverse head and shoulders by getting above this purple, this inverse head and shoulders neckline, it means we're going to head towards, of course, our target, but there's going to be something in the way, the old patterns neckline. And so because this is also a neckline, it needs to be acted as resistance at first. Just like the old, this inverse head and shoulders, we rejected it first before flipping it into support. So before you go ahead and break above this and head to 440, you need to pull away from it first and find support on the inverse head and shoulders neckline. That's why it was so vital with the weekly candle close. We were saying we need to see the weekly candle if you want this to be bullish. For the bulls out there that are still out there, the only way you flip this bullish, or keep this weekly bullish, which means for months and months ahead we should be expecting upside, you need to hold the inverse head and shoulders neckline, but also the weekly 55 EMA. And by losing that, this is no longer weekly bullish. So if it's no longer weekly bullish, what's the opposite way? Bearish or sideways. So it means that for the coming month you could be going sideways or down. Because we lost the bull market level and I had to flip it back into a bear market level, as well as losing the weekly bullish cross, as well as losing the bullish inverse head and shoulders neckline, this is no longer bullish. So this is no longer an uptrend unless you do things that are completely drastic and not what and is not what is expected. What's currently expected is that any pump is just a fake pump and it results in a lower low eventually. So any pump, it just should be a lower high. This is the expectation. The only way you invalidate this, if you do something completely out of the ordinary, reclaim 168, let's just say 170, and then take out 230. That is not an expected move because we made this lower low. I'm really happy I was able to give you this downward target anyway at the 55 weekly, ever since this weekly candle over here. I didn't even have to wait for the weekly close, but that was the final nail in the coffin, guys. When we had that weekly close, I said, guys, this is a shooting star on the weekly time frame. This is the signal. We're going to head back to the 20 and the 55 EMA. This is personally where I'm going to buy. But unfortunately, guys, when we did get down there, I told you instantly, this is a bullish candle. Yes, you're holding the 55, but over on Twitter, I did tell you guys, wicks get filled. The moment that daily candle closed, I told you that wick is going to get filled. I knew this quant chart was screaming it in my face. That needs to get filled. It filled it in, which is beautiful. But again, I said, if we're closing below this, you've just invalidated all the bullish notes, all the bullish potential scenarios, and that every pump, it just should be into what was old support, now confirming it as resistance. And we see that one day later, you lost the support. Well, you held it with that one, you lost it the next day, and you quickly try to reclaim it, but just flipping it into resistance. We have a wick going down, confirming support. You have the loss of support, and you try to reclaim it, but failing to do so, you confirm it as resistance. And a couple days later, we have our bearish cross. So I'm so happy I've been able to warn you guys of these scenarios. And again, going forward, I'm only going to flip bullish, or not even going to flip bullish. I'm only going to start to expect some upside once you are confirming $168 as support. If you're not confirming it as support, I don't care what's going on. It's just going to, in my eyes, I only expect further downside. I don't know how else I can explain this, guys. Because 18.6k for Bitcoin was lost, just please, I urge you all to go check out my Bitcoin updates. They're so vital. You understand what's going on. So with that making a lower low, we just need to anticipate Quant is going lower. If Quant invalidated the bullish patterns, and this was one of the leading cryptos, and it's no longer valid, it's no longer validating a bullish pattern, it's now invalidating a bullish pattern, which means it's not bullish, which means it's not going up in the short term. term. If it's not going up in the short term, it's either going to do the opposite or sideways. So we have our current range where we're at right now in this golden pocket. It's also here the range low, $83. That's what's keeping us as support. And of course this bear market box is our range high, so we're trapped in between this. But again, for me personally, any pump is just going to result in a dump. And then if we ever lose this, which as you can see, if we run into this resistance and fail to break it and we come back down to this key support, you could be forming some sort of shoulder, head, shoulder. It could be a repeat of this whole situation over again, just happening over here this time. So we need to look at that going forward. Remember that I just told you this, that it could be the exact same as this. It's just starting. We need to take it step by step. It's always step by step on this channel. What's just happened is the invalidation of all the bull targets. So that's not what should be at the front of your mind. Do you understand that? Thank you guys so much. If you want me to teach you all of this so you don't have to have any doubts, I have 50% off my course and I have a discount on my one-to-one mentorship at the moment. If you want to take action, please do so over on my Twitter, Louis_crypto. Let's smash 200 likes. Let's get to 5K followers. Follow my Twitter, turn the notification bell on, share the videos, and I'll catch you in the next one. Peace.